Hi there, Brian here from quantlabs.net. It's been a little while since I did a posting of anything of any significance, probably for some of my followers, which I didn't realize are quite big. Anyways, for anybody who does follow Quant Labs and myself, Brian Downing here, thank you very much for following and reading and watching and listening and even engaging and participating in what I do. Moving forward as of today, I'll be scaling back quite a number of my engagements. I'm going to be focusing mostly on algorithm development, so I won't be able to have the time or have the luxury to answer a lot of questions that come through the doors via LinkedIn, through the site, through whatever means. Need to re-strategize and basically set new priorities, which obviously the algorithms are going to be the priority in terms of sharing those. They will be done at a very high level. I won't be going so deep into the development and detail of the algorithms as I hit them. And the results, maybe not, I don't know. But just wanted to put that out there. I won't be able to respond as often as I'd like to, and as it's fast. Need to get this stuff underway right away and dedicate a lot of energy on it. A lot of the past things I've been engaged with have somewhat become a distraction and slow me down in terms of development. So I need to, as I said, focus on the algorithm side of things and strategies. Technologies there, the infrastructure's pretty well in place for as it looks right now, but I'm sure it's going to change in due time, which leads me into something that I've always been thinking about for the longest time. Been working with, as you know, open source high frequency trading systems and MATLAB specifically in terms of strategy development. So I just wanted to just give you a lowdown on what I've been working with, or just talking to somebody in Singapore recently, and they have been following me for a while, and this person sounds to be really involved in something that I'm wanting to get myself up to, not their level. I don't know if that's possible, but at least follow in the same similar fashion and direction. Obviously, this person's had probably at least 10, maybe 12 years of lead time, but thankfully they've been able to prevent me from going down the wrong paths like a lot of other people may go down. So I thought I'd share some of the higher level takeaways I've come away from this conversation. Mostly right now, with all the different technologies out there, it seems that GPU, CUDA is definitely the way to go. All the other vendors and third-party solutions out there, from what I've been told and I believe, don't work. You could probably spend a lot of money on those, and you'll sadly, hate to say it, see a lot of failure, probably a lot of disappointment as well. So that is something I've always believed in, and developing your own tools, software algorithms, software platforms, trading platforms, everything you have to have transparency with. I'm not a person that likes to work with a lot of black boxes or even gray box. I like to see source code. I like to see things out in the open, specifically with source code. I don't like to put something in, not know how it works, and I need to understand the under the hood technology. That's where I've come from. One of the other things that amazes me about the HFT world, or I'll get into this in a little bit. This is probably going to be a long ramble, video, but audio only. But I thought I'd share with some people. There's some technology companies out there. I don't know if they're more technology or quant based or hedge fund based or I won't lead them to the names, but they're very, very big. We're not talking multi-million. We're talking multi-billion-dollar companies. They're probably more along the lines of like larger hedge funds, but it seems to me to get into that world it's very difficult. They don't talk a lot, but once you enter into that network, it's just one of the most life-changing events any person can have. One of the things I've taken away from this conversation is you better have a love for this technology. You better have a love for doing this. And I'm not talking just waking up, working 9 to 5. I'm talking about, um, you know, I like listening to Kevin O'Leary. A lot of people say he's a loudmouth, has a big ego, but there's a few things that I can relate to when he says that you better have a full passion for something like this, which I definitely do in the world of quant and high frequency trading, all that. But one of the things that Kevin O'Leary says is that you better be willing to sacrifice certain things, and this can namely be your family, your marriage, all that stuff. This is a very intensive, mentally intensive project to be involved with, or career, or whatever you want to call it. So if you are entering into this and you really want to succeed, you better be willing to put up some of those type of sacrifices. That's something I took away. Another thing I've already mentioned is home building your own platforms, your own technologies. Once you get up to a certain level, you have teams that can help you provide you building your own hardware servers, having your own software platforms that you've built and only yourself have built or your team have built. That's an important takeaway. As I said, the FPGA is definitely something to look into. That's definitely where things are currently hot right now. No ifs, ands, or buts about that. I've looked at the clustering versus FPGA, and I'm seeing the FPGA seems to be the better way to go. So that's something I might go down. Fortunately for me at this point, MATLAB has the FPGA or GPU toolboxes, so I'll experiment with those, see how far I get. But with MATLAB, that might not be fast enough for what I'm looking. But again, we're talking very, very, very long time down the road. Now let's talk about the languages: the C++, the Java. There's no ifs, ands, or buts. Those are the two languages to use. Surprisingly, though, Java is used in this type of technology heavily. Doesn't seem to be a big issue. So that might be what I'm starting to lead to believe is that let's say you use something like a Linux. You are working off the chipset, so that would mean through one of the Java frameworks out there, I can't remember the name of it, but it enables you to talk to hardware through Java. So I'm sure that's something that is being exploited. And essentially, another big takeaway is direct market access. The people that build these type of systems are highly, highly, highly experienced. From what I've gathered, if you're dealing with direct market access, namely any of the major exchanges out there, be it LSE, the CME, or even some of the emerging markets, Singapore, Australia, ASX, or whatever, you got to really know the exchange's matching engine. This is fairly new to me. And then also you gotta have staff on board, or somebody that knows that stuff inside out. Namely, if you can find people that have actually are part of a team that built that technology at something like I don't know, any American or British based large exchange. You know The thing is, you don't want to use a lot of the third-party data providers. Something like an MF Global might scare off a lot of people. But you know, you have no choice, but you do have to use the primary prime brokers through all the large banks like Goldman Sachs or JP Morgan. They're not cheap. Um, you know, to get those kind of guys to notice you, you better be playing with capital of probably in the neighborhood of numbers that I heard today. $10 million, $35 million. So again, you know, you can't just dive into it with a basic $10,000 account and off you go. You got to have some seven figures in your portfolio. And the other thing is when you are doing DMA or direct market access, for instance, if you're on the CME at a new location for called Aurora, um, it's very expensive. Numbers again thrown, and I've heard this double, triple confirmation on this from a variety of unrelated people. Those expenses are for the servers that you want to run up are $25 to $50,000 a month. I ain't kidding on that. So you better come in with some large capital. If you're coming in on the cheap end, forget it. This business is not for you. Simple as that. So once you start getting in the CME or something like the CME, it's obviously prime real estate. Some of the things that I've also learned over all this is the emerging markets. Sometimes you always hear, oh, you know, through Bloomberg or whatnot, Bloomberg TV, oh, the emerging markets doesn't have the same performance. Oh, it does. Some of the emerging markets that seem to be hot right now, um, Australia, um, probably Singapore is another mature one that's coming up very quickly. Obviously, maybe China down the line, Shanghai, Korea, Tokyo, obviously are doing quite well, fairly mature. So obviously, when you hear me, I'm talking Asia. That's where the growth is. A lot of the Western markets overregulated, too much competition. So again, you know, if you want to get in it on it early, I was told somebody will say go west, young man, but in this case, you want to listen to go east, young man. So that's what this person said. I thought that was quite a fascinating discussion or something to relate to, and I can definitely relate to that. Also, you know, things like Brazil, India as emerging markets, they're there, but from what I gather, insider trading is a huge problem. So those markets are not really going to be worth investigating. India is too overregulated. Apparently, they don't allow a lot of outsiders into the market. So, for whatever reasons, I have no interest in either of those at this point. So it brings me back to the FPGA, where the engine matching is important. Risk management, everything has to be on the board. It's a new term I learned today called in silico, referring to Silicon Valley's early days. Everything's within Silicon Valley, and what it basically means is everything's off that chip. So all the processing for all your data, your algorithms, everything is what they call in silico, on the board, on the chip, on the memory. So that is something very interesting. Outside of that, you are going to hit latency issues, and you're just going to get killed out there in the market. As I was also told, it's either heaven and hell. In order to be in heaven, you need to focus on this sort of technology. You know, yeah, essentially you're going up against millions of other algorithms, so it's equivalent of an arms race. And again, I've heard that from multiple sources, unrelated again. Types of strategies. There's co-managerial strategies, multi-asset strategies. In essence, from what I gather, now I could be wrong, but you know, you're dealing with anywhere from, let's say, 100 to 200 active algorithms. Some will drop off, but they're part of a library that works, and what don't work, your strategies will evolve and will react to what the market tells it. There's a lot of actually surprisingly there's some holding of some overnight positions. There is a lot of in-depth analysis on weekends when the market's closed. A lot of it can be event driven. It's also news driven as well. You need to adapt to the market, have all those algorithms adapt to the market at that point in time. So there's a lot of end of day processing. Basically, since decimalization came into play, a lot of the ETFs have gone haywire since it's happened. Also, the big areas to be part of are futures and forex. We all know that. As I said, everything's all event driven. The execution's event driven. For me, I thought the analysis was done on the fly on certain models. It's not. What you do need for on the fly when you got your data coming in is certain algos that can adapt and react to that data as it comes in and process it based on that. Something else that I've picked up was the big one right now for a lot of these big HFT firms is cross multi-asset trading. If you read either Barry Johnson's book, he mentions that multi-asset is the way to go for this type of trading and strategies. The FPGA again, and everything comes back to the FPGA. You know, for this person who's in Asia, they have access to a lot of hardware for the chipsets. There's a lot of boards out there that they can get fairly cheap and build their own components, and then from there build their own servers. Big thing is data. For instance, hold on. Let me just go back. The chipsets, all that. They're either APIs are only either friendly to Java or C. There's some other ones out there, but I guess if you're either of those type of developers, you can use those languages to tie into these chipsets. Now here's an interesting stat I was told. You have quants out there and all these wonderful academia research papers. The funny thing is, with a lot of these students, these PhD level kind of guys and gals coming out with all these high financial engineering programs, 98% of them are going to fail. When you get into an HFT environment, and I could see this being so true, what you theorize will not happen in real world. So 98% of the time, you cannot apply what you're seeing, and that obviously comes back to a big time waster. So for all of anybody needing to get into that now, I think it's important to have as a skill, but don't depend on all these academia papers and whatnot to start making a killing with, because they're just, you can't rely on one algorithm that's going to take you from zero to hero in terms of a billionaire, let's say. I just don't see it happening. That's why you probably need the strong high numbers of algorithms, of 100 to 200 algorithms on as a library, as a suite of algorithms. It kind of makes sense. Now I've got a few people that agree with this. Past data will not work for the future. And when you think about it, that is so true. The thing is, things are constantly changing in the markets. It's too fluid. There's too much noise. And the funny thing is, that was mentioned from, we're talking with somebody who's got 13 years of real in the trenches experience. Jitters kill algorithms. So that is something you need to know. And you can only base all that experience by hard knocks. You know, trading, building something, and if it fails, you learn from it and you move on to the next one. Let's say data is a key, a big key. You know, I'm right now using IQ feeds. They've been, you know, recommended. You know, where it's affordable, you're starting out. That's something definitely to go with. Another from the same company actually is DTN Core, X Core. And the difference between the IQ feeds and these higher priced data feeds is that the data is timestamped. And I thought, oh, cool, I could record my own timestamp. You can't do that. You need to have the data timestamp from the server side. That's important. Yeah, your data can be a hindrance. So you know you need to get it around that and get it done. As I said, the matching engines are very important on your order book. I've seen that in different books that I've read. Another key is knowing how to process the data. And data, I mean, coming in from Reuters, Bloomberg. From what I've seen and what I've read, it does come down to something called the privileged and the non-privileged trader. Privileged trader is somebody who has access to the high-priced data. They know things today, and the non-privileged traders know things tomorrow. That's the edge that they have, because they can afford it. Yeah, they have the ability to be in the know well before the rest of the world knows. So what I read or hear about on Bloomberg TV, in my case, it probably was from yesterday. And that's obviously important if you want to know how to profit from these different types of opportunities. Another big thing is you need to know how to scale. Scaling is very important. I'm as a 20+ year developer, I know that from, I mean, you will not hear me go on about Ruby on Rails or some other language. You just hit too many bottlenecks and too many stupid things that prevent you from scaling. And whoever will tell you there's their own reasons for scaling, but it's not the type of scaling I'm talking about when you're working with like an FPGA. You know, is that's important to understand, but some people will never get that. Funny thing is, in the community of these traders, they don't see themselves as competition. The only thing they see the competition is the market itself. Another thing is, when you're in the know with these type of traders, you're in the know. We're talking all a variety of different quant shops. So let's say if you are in Hong Kong, a lot of the well-to-do quant shops are basically in the know. They know each other. They help each other. They're not competitive. And when you think about it, there might be a bit of freshness there for us in the West. Something I didn't know. You heard me say quant shop, not prop shop. Prop shop here in the West is that's how we talk about it. Prop shop over there means a trading desk, which is kind of looked upon as not something cool. So they refer to themselves as a quant shop. But overall, the market is crowded with a lot of these algorithms. As I said, it is an arms race. Your algorithm against whoever else's algorithm, or your set of algorithms versus their set of algorithms. So you got to be careful there. And so obviously data mining and your data set is very important. Obviously it's expensive, and you could treat it as garbage in, garbage out. You know, so data, that's probably from three separate sources I've been told to be careful of. FX data is a different world. You need to be very cautious on that. The spot data can be a nightmare in the world of FX, so you gotta be very, very careful there. Again, I said this before, where bank providers and data providers can be questioned, but you have no choice. You got to know the enemy, and some of their stuff is questionable, I guess. Um, you know, when you have your future spot versus FX spot, it's totally different type of data. Um, yeah, so your data provider needs to be really top notch. Um, you know, questions came out of technical analysis, um, with one of the people that were mentioned in terms of one, let's say the largest hedge fund managers, and I totally agree with this. You look at people like George Soros. I shouldn't say George Soros. Kenneth Griffin. Um, any other person that has done well in a hedge fund most likely have used quant-based analysis. The people that we read about in the world of technical analysis, they're not traders. I mean, they're trading, but they're not at the level of a Kenneth Griffin or John Paulson or any of these guys. Most likely they're using quant-based. That's why the quants are kind of like looking at the technical and going, well, you know, I shouldn't say this, but they're probably seeing that the technical traders are just not bringing in the kind of returns that the quant guys do. You know, and I agree with that. I'm not saying that technical analysis is not important. I think it is. But from my perspective, being me, Brian, I'm just using technical analysis as a way to understand the markets because it's easier to pick up. To understand the markets from a technical analysis side is a hell lot easier than understanding it from a mathematical point of view. And that's what quant basically does. And you know, that's everything in a nutshell. It's quite a bit. You know, things are that are the edge now is the microstructure, what you focus on, the multi-asset, and your data. The quality of your data is what gives you your edge. This person trades in direct. I'm gonna eight direct market access, meaning they have servers on the 8 exchanges worldwide on emerging markets and the big Western markets. So this person has a fairly significant operation, and somebody of who's not BSing. I can tell that for sure, as I've come across a few over the last year or two. Funny thing is, a lot of the strategies that are used could have anywhere from 6 to 12 months development time, testing, and blah blah blah. Some of them only have up to a two-week life cycle. So you know, understand that you can't just put together a strategy and just have it done really fast and expect the life cycle of that strategy to be in place for a while. You know, I keep saying the key, risk management's the key. One thing that I've seen, and I asked about this, was portfolio optimization. What I was told, when you analyze a portfolio, by the time you look at it, your portfolio's already changed. The data, the speed is just way too fast. So there's no point in doing it. But the risk management is important. A book that was recommended, I haven't looked it up yet, is a book about how models behave. And there's a book I'm going to try to look for. I might post it sometime if I find it, about what books to read that would probably help when you have a whole suite of algorithms out there in your operation, your environment, and how are they behaving concurrently with each other is probably the best way to put it. So in all, everything comes back to FPGA, and that's where everything is for the big boy traders or the big boy hedge funds, let's say. And all the processing is done outside that FPGA, which I find quite interesting. I'm needing to further investigate that, but I don't know where and how I'll be able to publicly describe that. So I thought, another question might be about the actual physical server that you build with these FPGA boards on them. It's not like you can call up Dell or whoever, say, hey, give me a server that does this. These type of servers don't exist. These are custom built servers. From what I gather, they're specially designed with some type of customization and specifications on the hardware side to optimize the capabilities of FPGA. So in this case, team that was brought in actually built the LSE and know how to build it, so they were able to build these custom servers. The value of these servers is not cheap. We're looking at $10,000 to $25,000 each. I don't know if that's because of the FPGA board or whatnot. I still need to figure that out. But right now my goal is the algorithm, and that's what I'm focusing on. We've also talked about the vendors. There's a lot of hype out there with people jumping aboard and flapping their arms up and down saying we got a solution, and they could be a big time waster, to be honest. You might not get the performance or the hope you want out of that solution. So it all comes back to yourself and building your own solutions, hardware and software wise. Hopefully this has been a long video or a long audio. If you're at the end of this, congratulations. I've given my 2 cents on it. Big 2 cents, I know. But hopefully that'll help out some people. I'll talk to you guys at some point. Keep your eyes and ears out peeled on the website. I'll try to document as I go and maybe put up my results or what I'm doing. But as I said, I have to be respectful of my dedication on these algorithms and strategies that I'm building now. I think I've got enough information posted throughout LinkedIn, Meetup, the site, quantlabs.net, and the YouTube channel. So there's a lot of information out there. I mean, that's just a tip of the iceberg of what's out there online. The problem is knowing how to cut through it, decipher what works and what doesn't work. So that's where we stand, and from this day forward, I'm focusing on the algos and the strategies. So I'll talk to you soon. All right, have a good day.